Hello, everyone. Welcome to the weekly roundup. Today, we will cover Canada's new leadership, interest rates, and market volatility. Hello, Ben.
Hey Eva, happy Thursday.
Happy Thursday, almost Friday,
That's it.
and it's good weather.
Yeah, the sun's coming, weather's warming up, and we're lucky number 13 today.
Awesome. So, we're going to start off with the announcement of the new Prime Minister, Mark Carney,
hmm
who recently won the leadership of the Liberal Party. Was the market expecting this announcement, and how is the market receiving it?
Yeah, I think initially when the process started, Kearney wasn't totally committed to being involved, and then as things moved along and he got more interested in the position, started talking more, it became pretty clear by the end that he was going to be the leader of the party. So, look, I think from a financial markets perspective, there he's a known entity, head of the Bank of Canada, head of the Bank of England, chairman of Brookfield Asset Management. So pretty versed and well known to the financial markets. Spent time at Goldman Sachs as well. So I think from a financial markets perspective, people were pretty happy with that outcome. Um, and what's it going to mean for the leadership race in Canada? I guess we'll see. But I'd say generally financial markets know him, and so I'd say that's generally a positive. He sits on one of the IMF committees, World Economic Forum, so really internationally connected. And so with the stress kind of happening in the Canadian economy right now with U.S. Canada, probably relative positive right now.
Okay. The BOC met yesterday and cut rates by 25 bips. Again, was the market expecting this, and what do we expect to see going forward with the additional tariffs?
Yeah, sure. It's been such a flip-flop year, as you know, with that and cuts and not cuts. And, we came into the year anticipating 100% probability of an additional cut in March. That flipped back to something around a 15% probability of a cut about 3 weeks ago. Then tariffs on, tariffs off. And then, as we know, most recently, last week at least, they announced that they're proceeding with tariffs. And so that jumped back to the 80% likely coming into Monday. And then obviously we saw a cut yesterday. So certainly as the threats continue, I think the path continues to be lower. And so our economics team has been back and forth as well. What happens if we do this? What happens if we don't do this? What are the implications? Who is it going to affect? Is it going to affect the Canadian companies, the US companies? So I'd say certainly as the tariffs continue on, rates continue with a path lower. And I'll give you a quick update. We had economic numbers where we can look at the actual expectations, but certainly lower is expected based on this.
Okay. Inflation numbers came in, I think, yesterday. How were they, and could this influence the FOMC's future decisions?
Yeah, so I think it's probably helped them to some extent because I do think they've wanted to cut rates, and so they've been waiting on a number of things, and they have a couple of mandates, as you know, in the U.S., which is unemployment and inflation, and so they're happy to see inflation below expectations. And some of this has to do with the tariff threats as well. You see spending decrease. You see U.S. companies not sure what to do. At the same time, we saw working hours decrease and unemployment tick up a little bit. And so those two things probably give the Fed a bit of cover. And that has also been flip-flopping. As you know, we came into the start of the year at 75%, 75 basis points guaranteed this year. And then we went back to, basically flat. Maybe they would increase rates. And now we've come all the way full circle on that. And it looks like 75 basis point cuts ahead. So that probably helps out Powell from perspective of those numbers are starting to come in line with what he was hoping for.
Okay. Let's talk a bit about the market this week. How has the volatility and how has trading sentiments been?
Mm. Volatility's been high. Trading sentiment's been bad.
Straight up.
Yeah. Well, we've seen volatility spike across pretty much every asset class with the exception of gold. And we saw obviously stock market is what most people follow, which is the VIX. The other for bond markets is the MOVE index. And so we've seen that spike as well. So yeah, volatility's picked up. And so coupled with your point around sentiment, the sentiment's been pretty negative as well. So it's one of those things that I've talked about. Sentiment is tends to be a counter signal. And so you can look at many different gauges, and I'll show you an update on what our sentiment gauge looks like when we go through the presentation. But one of the most followed one would be on CNN. They have a fear and index sentiment, which changes every day, and a scale of 0 being super afraid to 100 being super happy. And we're sitting around a 17, 18 right now. And so that's a great spot that shows you the different variables of risk. But certainly people are feeling a bit concerned about markets. And oftentimes that's a counter signal if you see some positive things coming on the other side. And one of the things we talked about coming into this year, at least in the annual outlook, is we thought, end of Q1, early Q2, we'd start to see money supply increase around the world. And so we're still of that view. And so this signal here is probably saying, okay, where are there some opportunities? Have some stocks corrected too far? And if we expect money to come back into the system, could this be a positive for them? So really starting to dig through and see where the opportunities are right now.
Yeah, good. Let's go into the charts.
Sorry, just bear with me. It looks like it wasn't open in there. So here we are, March 13th, it's around 1 o'clock. So anything that happens after this, certainly can't comment on. But so a couple of things. Again, this is a lot of the things that what we've talked about is what's sentiment, what are people feeling, what are the changes and having an impact on what. So this is a great chart. This is University of Michigan consumer sentiment. And so if you look at these previous periods, there's two parts to it. One will say, okay, these gray bars, which you can clearly see, those gray bars are recessions. And we saw a sharp one in 2020, of course, as you remember. And then we saw a couple of events throughout that period where we saw these snaps where we didn't get a recession. So there's been some thinking around, are we in the 90s here where we get this snap lower, but then a bit of stimulus stimulates the economy, get this massive fall off in consumer sentiment. So, this is an interesting variable. And as we've spoken about before, the US consumer makes up something around 70% of GDP. So we have to be conscious around what the consumer is feeling. So this is an important number. So the one piece we talked about briefly is Doge has been talking about some of their savings giving a direct benefit to the consumer. So this could snap back quite quickly, but it's an important piece to watch. So to your point, Eva, just around where and what do we see happen from here? And so this has been a continuing updated number as the years progressed. So I think the one thing that most people follow would be this target. So this is Canada's target. This is the central bank in the US target. Federal Open Market Committee, so the FOMC. So we saw that we cut, so we're at 2.75 right now. So if you look at what we expect based on where this goes from here, is we do expect another 75 basis points of cuts in 2025, given the metrics that we know right now. And to your question off the top around what does that mean for the US as well? So US is at 4.5, and I think we're going to have to see what happens next week. So they have their meeting next week. But if you look at this, we do anticipate 75 basis points of cut, and that's what the market is pricing in right now. And we'll see what that means from a longer term basis. The other couple of the key points that you'll get a lot of headlines around is what's happening to the 10-year bond in both Canada and the US. And so if you look here where we are right now, What's the expectation of? We do expect yields to come down. And so obviously, if you own those bonds, that'll provide some stability, or they go up when rates go down. So if you're thinking about investing in your portfolio, those bonds can be a counterbalance right now. So important to look at these two things, but definitely the target rate is what gets all the attention from a what are the central banks of the world doing. And so this was at the start of this week. So this number will certainly be lower given what's transpired this week. So we had this is our gauge around sentiment. So extreme pessimism to extreme optimism, and then last week versus this week. So you see that start to tilt back to, volatility's picked up. Breadth is how much of the market's going up or down at any given time. What's the risk appetite for the market? What's speculation like, and then surveys gone real negative, as I showed you up at the top. So this is a great thing to look back. What do the other periods look like? Have these been opportunities, or is this something more that we need to be conscious of? But this is a great gauge for sentiment, and as we've commented on, it's been a place of a bit of concern in the markets. And so just as we wrap up this section, just wanted to give an update just on the telecoms. And so we put out a piece recently just saying that maybe this is an opportunity if you're looking to seek some shelter and looking to own some equities that pay good dividends. And this is a look of BC, Cogeco, Quebecor, Rogers, and TELUS. And what we've seen so far to start this year is you've seen all of these names start to pick up here. But I'd say the key pieces to look at would be BC and TELUS. You're starting to see those turn up right now, and you can look at those as potential places to hide where they have good dividend yields. They've had a difficult couple of years, so looking for opportunities in this market, I think this area provides an interesting space. And before we go back to more questions, Eva, just as remember, the opinions here expressed do not necessarily reflect those of National Bank Financial. Anything mentioned in here, you can speak with me or your investment advisor. And that's it for the charts today.
Thank you, Ben.
Hmm?
What should we be looking out for next week?
Yeah, so there's a few things that we're seeing right now. Obviously, we've seen gold, as I mentioned. It didn't have a big week of volatility. I saw on the gold futures, anyways, we got to $2,998 an ounce. Big psychological level there to watch and pay attention to. See if money continues to flow into that. We have the central bank in the U.S. meeting next week on the 19th. So that is an important announcement to see there. Obviously, to your point around soft inflation numbers this week, that should be a good signal, but we'll see if they cut or not in that meeting. Presently, we don't think so, but that'll be important to watch. There's a few other things that came out this week just around how the CEOs are feeling right now, and so you've started to see, at least from the quarterly calls, CEOs have been much more defensive and a little more concerned. We saw the airline CEOs start to slash forecast, and so it's kind of overall giving you a feel around what the consumer is feeling like. And so, I mean, sometimes these indicators, while are scary right now, tend to present future thinking about what the is likely to happen, what are the governments likely to do, and what are the central banks likely to do. And so right now we're into this period of choppiness, but these signals tend to say, okay, maybe we're starting to think about where central bank starts to cut a little bit more than we start to expect. And if we get some stimulus checks that Trump and Musk are talking about, this could stir the consumer right away. So, I think lots going on, but certainly as you read through what the CEOs have been saying, that they're a bit concerned, and that's kind of again a counter signal to think about.
Lots to watch out for. Thank you, Ben.
I think I had
So,
one more to add. One more
okay,
to add.
take it
Just
away.
we can't leave without the about what's going on with Greenland. So because a lot of people have been paying attention to this, and they just had a political change, and so it was controlled by the left leaning politics, and the right-leaning politics actually won significantly. And so it's actually quite pro-US leadership into Greenland. So this, I think, is going to be interesting. I mean, it seemed silly when initially thought about, but if you get a political party that's interested in negotiating at this point, I think it'll be worth paying attention to.
Absolutely. Okay, some exciting information. I seem to have exciting news these days. Next week's weekly roundup will be special, will be different. I will share details early next week. Be sure to keep an eye on your email box. Remember, our daily financial heartbeat is back. The link will be in the caption on this video when we post it on YouTube. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. For our clients, please also reach out to me if you have questions and you'd like to book a portfolio review meeting with Ben. Thank you for listening. Bye, everyone.